Greetings, Dr. Jeffrey Scott, and this is my weekend market update. A little bit less PowerPoint and more of Market MRI Pro. I titled this, Will Intraday Reversals Lead to a Rally or a Trap? I feel pretty strong, like every other person that looks at charts, that the market's going to go higher on Monday, but doesn't mean it will. And then the bigger question is, how far? Thought that maybe what we saw on Thursday was a bear trap, and maybe that will turn out to be true as well. Again, my emails address, I have several, marketmripro@gmail.com and hgsidoc@gmail.com. As always, this is for educational purposes only. Any recommendations I might make or suggest should be taken in the spirit of education, not investment advice. The intent of the video is to demonstrate the tools of top-down analysis and how I apply them. Trading involves risk. You are solely responsible for any investment decisions you make. I may own, intend to buy, sell, go long, go short, any stock mentioned in this report. Trading stocks and options should be considered risky, and you should always consult with your financial advisor before making trades. And speaking of trades and tools, I've got tools in multiple platforms, but I am very independent. This is a website that I put a video up most days in the morning, certainly every Monday, stocksanddocs.com. If you're looking for a wealth charts only video, which I wouldn't blame you, it's a great platform, you'll find it there on Monday morning. I also have a recent Google group. I don't keep a mailing list. I used to mail friends and family some updates of what I thought the market was doing, and it was well received, except it got identified as spam to my own family members. So I'm done with that. So now what I do is I have people who want to get my free updates, which is usually a video every night that doesn't necessarily get posted on YouTube or anywhere else. Market comments. If I think I see a market change during the day that's dramatic, then you'll get something as well. I will invite you to my events. I will offer you discounts on my products, but there's no requirement to buy anything. It's not for solicitation. I don't give the list to anybody else. And I do give you a discount on my products. Speaking of what I like to do, there'll be a deep dive into top-down investing, things I've learned from really my mentor, guru, Ian Woodward, and how I apply them today, 20 years since he taught it to me. It will be in the morning Saturday, so many of you are going to be watching this afterwards. Sorry about that. But I put it in my videos the last couple of days. There'll be a Zoom link below. No ownership of my tools required, but I will be doing some training, how to use them as I teach the concepts of top-down trading or investing. For those that like my education, I will be speaking a lot at the Orange County meeting, June 6th through 8th at the Residence Inn in Tustin, Orange County, California. Greg Mills at gam72054@aol.com is the contact. I will be inviting some name brand speakers. Most of them will come in via Zoom, but I will be live and a couple other speakers will be live. And the benefit of being live is the networking and the opportunity to get to know some really good people. And I love it because the same people come year after year, which either means I do a good job, they like me, or I'm just lucky, which I could be. One thing that isn't luck is you got to know when your earnings are coming and what news is coming. I thought, well, maybe we'll get an easy week after this week. No, we got two major news pieces that are going to stimulate the market. We got the CPI and we got the PPI, the whole complexes. If we see inflation tick down, I think the markets will rally throughout the week. If inflation ticks up, it's not great. Now, it could be a paradox in that the 10-year and the 30-year dropped as there was concerns about economic damage, and maybe part of why the market went up today was Powell said the economy was fine. So I guess a big move away from expected either way might be problematic. And then over on the right, boy, there's still a lot of earnings left. We're getting into some of the secondary companies, a lot of retail, still some tech, Adobe, DocuSign. So judgment call to hold stocks over earnings dates. It is bad judgment to not know when your stock's earnings date is scheduled. This comes out of Earnings Whispers. I mean, everybody's got to be on Twitter or X now. I don't use it hardly at all. I probably should. I'd actually have more people following me if I did, I suspect. But just go in there and every weekend type in Earnings Whispers and this pops up for free. All right, let's go look at the charts. So as I mentioned, we'll probably be spending most of the time um, in this video looking at my new product, Market MRI Pro. So let's start with going in what I call the daily brief. Now the daily brief is going to really look at the markets, how they closed, and there's a number of things in it that intraday are incredibly useful to me. So let me walk you through this. Um, the first thing is, since it's the end of the week, let's look at 5-day change. So on this week, it was a rough week in the markets. The VIX, here the VXX was up 11.78%. It may have peaked. We'll look at least the VIX, in the charting forms. Um, if you look at the major market indices, they were down significantly. This is over 5 days. Diamonds 2.3, spiders 3.07, Qs 3.21, and small caps got decimated 4.05. So on the week, it was a tough week. All the other parameters are on the 1 day. If we look at the 1 day change, Qs were up 0.74, spiders 0.56, diamonds 0.55, and Russell 0.33, and volatility was down 4.65, which means it was actually higher midweek. Over here, you could see that the ETFs of the major indices, all of them finished in the higher part of the range. The laggard, the Russell, but still was at 70%, at 78% of the daily range. And volatility was up higher, finished at the bottom of its range. Well, to me, that's very helpful to watch during the market. It gives me a sense of where we are within the range, how big the range is, the highs, the lows, etc. And these are all not absolute changes, but percentage changes. Now, if we look over here, we see on the NYSE, the NASDAQs, the number of new highs, number of new lows, and the net new high, new lows at various time frames. Even though it was a much better day in the market for the bulls, we still are on mostly new lows, and new lows are not how you build a bull market. These things are really cool. My buddy Sager at superiorprofit.co, tradingprofitably.com, I think is one of his other websites, an avid YouTuber who puts on these great videos Saturday or Sunday morning, the philosophy of trading and tools that actually are trading systems and an indicator. They're amazing. He started showing this analysis for the S&P 1500, and I liked it so much I said, man, I'm going to do that for the NASDAQ and the NYSE. There's 4 things in each of them. There's a number of sectors up versus down, industry advances versus decliners, how many stocks were up percentage-wise, and within the Bollinger Band, we have what percent of the stocks are above the midline. In a bull market, that's high, and bear market, it's low. So we can see on Friday, 64% of the sectors were positive. It must have been 7. And on Thursday, none were positive. 66% of the industries were positive in the S&P 1500 today, and you could see it was a lot lower in the low 20s on Thursday. 64% of the stocks were up. Well, that's a big change. It's been less than 50, and 34 above the mid-range, so longer term it's weak. NASDAQ 62, 65, and 53, only 24 above the midline. And then the NYSE, similar, 67, 64, 59, and then 33. So this was a super strong session in the market. I think many of us are asking or wondering the question, is this going to be meaningful, or is this just a one-day wonder? If we look over here, we have the S&P sectors. Let's shut this thing down for a second. And I could look by 5-day change, 1-day change. Let's look at 1-day change. Yes, I know these columns change shape when you do it. We're still talking with the vendor that we buy our some of our charting modules from to fix that. It actually isn't bad. 1-day change, let's look at the leadership, is utilities, and energy. Tech still up 1.45, industrials, communication. On the bottom, even though it was a great day, financials and discretionary. So if this was such an awesome day, I would have expected not utilities to lead, but rather I would have expected technology, communications, and finance to lead. So that's a little flea in the ointment of Friday. We look over the 5-day change, which is going to be impressive because it's probably going to be very few things that were positive. You could see the only positive thing over 5 days was healthcare, and then only down a little bit was staples. So things that you would expect as defensive. Over 50 days, the only things that are down are tech, interestingly, is now down over 50 days, as is consumer discretionary. So we've definitely rotated out of the risk on tech assets into something much more risk off and defensive. Now, the themes allow me to take the question deeper and to ask the question, what themes were working? So interestingly, we had a rebound in tech, even though it was only third, and we had semi-solar, marijuana, then we got country Norway, renewable energy, XOP, robotics, automated, clean tech, China, Internet of Things. So this is great if you're a growth stock investor, but it was one day. And if you want to look at what was weak, I can just flip this around and you could see uranium, video games, metals mining, telemedicine, lithium, millennials, copper mines. Okay, that's fine. And what about over 5 days? What's been the strength? So the strength over 5 days was a lot of China and miners, copy, Norway, miners, clean tech, Southeast Asia. And if I look at what was weak over 5 days, leisure and entertainment, oil, gas exploration, cannabis, millennial consumer, Dow Internet, MLPs, FinTech, expanded tech, cloud. So the things that were on the top in one day are kind of on the bottom in 5. So at best, it was a mixed week. Now, I have this on real time, sort of. It sits on one of my monitors. But what we did when we built this, and this is my product built for me by Praveen with my specs, when I built this, I wanted it to be available real time. And then as I used it, it was nonsense to use it real time. It's a great tool because I can't look at it full time. I'm an end of day trader because I work full time. So we'll have it set so it will update. This screen will give you update in about 3 seconds whenever you hit that. So update it every minute if you want, but it's going to only update when you refresh it. There's no reason it doesn't change that fast to have streaming updates. It will if I wanted to, but we set it. If I'm wrong, if you feel differently, let us know after you try it out. We'll go right to the timing model, and let's look at the weekly timing model. In fact, let's even step out and look at the monthly timing model. There was something that I didn't expect to happen on Friday, and that was this month, which is still in the midst of this month, which is March, actually went to a sell signal on the monthly on the Russell. We've been for many months, we've been in buy signals on everything. This is like the last one of the ones I look at to fall. It's very slow. The point that I even look at this is to show the long-term trends that I'll capture. But remember, the month isn't over until when? Until March 30th or 31st, how many days March has. So it doesn't count yet, but it's interesting, and you'll notice that we almost got back above the, the oh, I'm having a mental block, the WMA during the day, and it's got a little bit of a tail. If I look at the weekly, this one I take very seriously, and everything is broken down well below the WA. You could see stocks have approached, certainly the Qs have approached a reversal area. Not as much in the others, but we have broken down. We're in a sell signal on all 4 of them. The diamonds is new. And the weekly is sort of my main timing model. And this tells me to be very careful be careful opening new positions, raise cash, um, and then let other things like a follow through day cancel limbers, or let the weeklies change to positive before I get too excited. So if I go and I look at the dailies change, look at the dailies. Dailies had big reversal days. All right, markets opened here, traded down on the dailies, and closed higher. So the white is an up day. The open means it closed higher than it opened. So it's possible that we just put in a short-term bottom. In fact, I think we probably just put in a short-term bottom, but we haven't reversed. So now I wait for either these to start turning positive or an, a cancel follow through day. And I think the first day, because we had a big move on Wednesday that we negated. Actually, was it Thursday? Yeah, Wednesday was this day. Thursday, we were down. Friday was a good day. So you wait 4 days from Wednesday, Thursday, Friday. So Tuesday would be the first day, I think, Monday or Tuesday, I can't remember, 3 or 4 days before we can have a follow through day. So if we were to see next week a greater than 1% move up on higher volume on one of the major indices, that might be a sign to go in. So right now I'm careful, but you could have bought some today based purely on the candlesticks, but there's still risk there. If I look at my buckets, and this is something Ian taught, I should take the S&P 1500, you put deciles between the bottom of the Bollinger Band and then the top of the Bollinger Band, and he taught us S&P 1500, and you see how many stocks percent B per decile, and then you have some that are below and some that are above, and you look for the ebb and flow of the market. Now this gray bar, you see NYSE, S&P 1500, NASDAQ, and Russell 2000, tells me that we were a little bit more oversold yesterday and that we had what I call a right shift today, where we came down at the stocks at the bottom of the Bollinger Bands moved up. We had some at the top move up. We're not extended to the upside. We're less extended to the downside. So it just is consistent with the rally day we had. Probably doesn't change anything. The market breadth tool is a tool that looks at the NYSE on the left and the NASDAQ on the right. Right now it's only going to work on a daily. I would like to make it work on a weekly. But then we got to refactor everything down below, so I don't know what's going to happen there. So there's some changes here. We have broke down this week below the 50 on the NYSE. On the NASDAQ, it's broken down by the 200. Both of them had hammers on Friday, days that look like they could be reversals. Here's your regular volume. Here is stocks above the 20-day in green, 50-day in white, and 200-day in red. And you could see at bottoms, it kind of extends down like this. We're close. Maybe we don't get any more on this one. Not as much on the NYSE because, hey, we haven't come down that hard. Then up here, you have new high, new lows. You have the AD lines, and you have up-down volume. And we just look at which direction. The new high, new lows are still negative, but on a daily, the AD line and the up-down volume are very positive. So bullish signals. They've been red for a while. Down below that, we have some of the Ian Woodward mumbo jumbo that I'll teach everybody on Saturday. The Eurekas and Phoenix and Hindenburgs and Bingos and Bongos and Bangos and Kahunas. And we didn't get any signal over on Friday. Now that could be good and bad. I would have liked to have seen a Eureka, which is a bullish exuberance signal. Sometimes you'll see them. We have this thing that we invented, or Praveen invented, called the defib, which is a really strong reversal signal. I didn't think we were down far enough, so I'm not surprised. So my gestalt so far is that we had a good rally on Friday after a reversal midday. We're probably going to go higher. My conviction to put all my money at work, talk to me after the follow through day. Let's take a look at the U.S. indexes. So what I'm going to do is click on it and make each one enlarge. So if we look at short term, we really broke down on the spider this week. Here's where we started at the 50. And this is called an ice hole failure when you run into the 50 and you fail. Um, the only thing that looks bullish is that we had a pretty massive reversal at the 200. And we can see that on the daily, I'm going to put my glasses back on. You can see that we were up 0.5% during the day. I mean, we closed at 575.92. We were as low as 565 on the S&P 5 on the spider. So that's a lot of handles if you looked at the futures. So that's kind of a bullish looking or short-term bullish thing. And if you look back, you could see that we've undercut it before, but typically not a bad place to buy. If I look at the weeklies, and maybe this version I didn't turn them on. We do have the weeklies working, but I don't think we turned them on this chart. That'll be in the update. So I can look at the weeklies in the other layouts, but that'll be something that'll be turned on shortly. Let's look at the Qs. Similar story. Now, what's a little bit less exciting is that we didn't get above the 200. So you certainly could see on Monday, I'm expecting the market to come up. But what am I expecting it to do? I'm expecting it to, at most, run into the 50 and go down. That's my thesis. Now, we could just drop down here. We might trade sideways in here and then go higher or lower. Or, if you want to believe in Santa Claus, we go up like this. I don't think that's likely. So those are my scenarios I'm expecting, but most of them have us going up at least to start. And that's what I expect with this reversal looking candle there. Again, it's lengthening the time out a little bit. Oops, sorry about that. Let me reset that. You know what? I had to turn off that's why I wasn't doing what I wanted to do. You can see we've pulled down here before in August of 24. We pulled down in this area back here in October of 23, which was a pretty good time to go long. We pulled down back here. So more often than not, we reverse from this area. So why would I expect anything different? Diamonds, and obviously each of us will decide how much we want to go in, if we want to go in here or not. Didn't quite pull down to the 50, but also a reversal candle. Yeah, I think the gestalt here is the markets go higher. I kind of thought we were going to come down to that level, but we didn't. We still have time. If we look at the Russell, that's been the weak sister, and but it too had a pretty strong reversal in the market on Friday. Now this is a big breakdown. It's reminiscent of what we did in 23. And you could see the rough market we had in 22 and 23. So as I look at this, my guess is that like the NASDAQ, it's going to have a hard time breaking through all of this, but there's still a lot of room. It's oversold. It's at minus 91.8. But it's going to take a lot of work to break above the 200 or the 50. So I don't have a lot of aspiration. So what did I just describe? I described the markets being, I think, inclined to go higher Monday and maybe Tuesday. I'm concerned about resistance not far away. So I probably wouldn't put all my money in until we break above that. And oh, by the way, we got that CPI and PPI coming. I think it's going to be a more cautious week than it could be despite those beautiful candlesticks. I mentioned the VIX, and you could see that the VIX carried up a little bit this week. Let's open up the VIX here, take a look at it bigger. And you can see it was down 0.91, but it traded higher during the session. These are where the peaks of the VIX have been. This was a particularly tough period in the market, and this was back in December of 24. This was a major blow-off peak in the VIX, and the market rallied from here. 62% move in August of 24. Is this enough? My guess is yes, but obviously time is going to tell. Another sign that we could go higher here. And then the dollar's been the market's friend as it's really sold off. Maybe we should be worried. I mean, a lot of people like a strong dollar, but whether it's tariffs, Trump entropy, European rate cuts, but the dollar has dropped on the week. Let's go look at commodities. There'll be another update of my software before the education program that'll have some more goodies in it that I like. Now, Praveen messed my order up here. Not a big deal. I start with oil. Actually, I used to start with gold and silver, so let's look at that. So gold in the market on Friday was up about a nickel, 0.05%, and silver was down 0.33. They didn't do much. Oil, nice gap up, 1.25%, but really after a sharp pullback. Now the interesting thing here is hammer. We thought that'd be a reversal candle on Wednesday. Nothing happened on Thursday. A big move on Friday. That must mean somebody thinks the economy is going to do well. And natural gas keeps putting in these flags and going higher. So my guess is natural gas is going to continue higher. And then if we look at the 10-year on the top, 30-year on the bottom, you could see on the session the 10-year was up 0.72 and the 30-year was up as well 0.79. You know, we saw the rates falling to a point that's good for the market, but if the rates are falling because the pundits think the market's going down because of the economy, I'd rather see the rates hold. And I think we saw that again closing on highs after Powell's speech. So I think I've spent enough time at the market, and you've got my thoughts, which is maybe we rally from here a little bit. We got to get through a CPI and PPI. And if those come in just a little weak, but not showing the world and market imploding, we could run up to new highs. I just don't think so. And I'm looking for my daily timing model to start turning positive. And I'm looking for that follow through day from a canceling type perspective. So now the last piece is now let's look at what sectors were leading. Now we looked at that some on the daily brief, but these are, boy, that was fast, ratio charts, which shows me where the strength is. So if you're pointing up to the top like industrial, that's strong. If you've had to the top and now I'm seeing a red, you've weakened some, but you were recent leaders. So staples, utilities, real estate, and healthcare of late had been leading. What are they known for? Being defensive. Today was a reversal of that trade. You could see communications is up at the top. Technology is trying to get off the bottom. It really got killed, as did discretionary. Financials sold off into the end of the week as well. Materials and communications both look pretty good, and I guess industrials would be the three that look like they're the strongest. Now we're going to go into what I built this product for. I wanted real-time scanner during the day, and this will update every minute. Right now we're going to change to 15 seconds, so the data would be up to 15 seconds old. And I'll probably put a refresh button back on it. But I have a number of indicators I look to help me find stocks that are moving up. I have a specific way I like my charts. And since I'm a top-down guy, what I typically want to do first is to go into a piece here called the top-down section. We're really not that creative on names, and just look at where the strength is in the market from a one-day performance. And you could see energy, utilities, industrials, tech, real estate, staples, and healthcare. Now, those are not what I consider to be defensive. And what I might do is highlight energy, utilities, and industrials because they had the three best day, and then the 737 stocks will show up there. But that's not how I like to do it. What I like to do is I've got short-term momentum, very short, and I like taking the top three. And they may have been the same: industrial, engineer, and utilities, 737 stocks. And now I can do a number of different things. And what I typically do is I rank these also by 2-day momentum, which is what that is. And I start going down my list. So WSO, and I like uptrends that pull back and go higher. If I look at the weekly chart, it's definitely been an uptrend. It's in a pretty tough pullback. All right, so looking at the daily charts, kind of sideways, kind of loosey-goosey for my taste. Had a big move off of a confluence of moving averages. I have my dots here, so it had a momentum, breakout, volume, and what's my CPR system turned positive. This is relative strength versus a spider. I like the breakout versus the moving average. OBV versus a EMA. I like the breakout there. This isn't bad. I don't think it's great. So let's go to the next one. John Deere. Uptrend, yes. Pullback, yes. Breaking out. That's interesting. LII, Lennox International. Not yet. Axon, the old Taser. Pullback, not ready yet. International Toolworks, don't know much about this guy. Let's look at it from a weekly perspective and give it some more time. Yeah, again, it's kind of a wide range swings, but it's definitely an uptrend, had a pullback. And I like moves off of the 50, and it's got PSAR reversal, and it's got my momentum and my breakout indicator. Okay, what's this one? Lockheed Martin, no. Pool, no. Ranger. I always got to remember to go back to my daily chart. So let's look at Lockheed Martin. Nope. Pool. Nope. This one did look kind of interesting. Pulled back, but still below the 200. And then I have something called, this is EFX, Equifax. So none of these really are beautiful to me. I'm not surprised. We have a rotation in the market. But then I have some trading systems I can look at. So let's look at pullbacks and uptrend. Let's look at they're above the 200-day moving average, volume more than 500, price greater than 5, and they have 2 days momentum. And I actually have some. So we looked at Deere, we looked at ITW, Illinois Toolworks, we looked at AGCO, we didn't look at yet, too low in the pattern for me. AirSale, cheap stock, still cheap stock, looks kind of interesting. I might have to do research. It's got gap, volume, breakup, momentum, good relative strength in OBV. It says that it's extended at 100, but it doesn't look too extended for me. PCAR, here's one that's sideways trying to break out. MSM, downtrend. CNH. That one's breaking out. This is in the same world, I think, as John Deere. So what I could do is I could highlight a couple of these that I might be interested in, and I could go to add to list A, and they'll show up in my hot lists. So that's one way of approaching top down. So now I'm going to take those out, and I got all my things set up here again. Let's look at by 2-day momentum. What are my top industry groups? So now I might look at 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Might be cool to have a top 10 button, save me the time there. And, well, some of these were in there. But let's kill the filters for now, see what comes to the top and look at a couple of them. And then we'll put the filters back on. So we've already seen WSO and Deere and Pool and Granger and FX. Dollar, is this lending tree? No. I look for specific patterns. Pullbacks and uptrends, that's not an uptrend. Booz Allen, Elevance. So I've got a lot of things here that are bouncing off the bottom. SNA, United down on the bottom. So again, I might decide I don't want to look at 1,000 charts. Let's find pullbacks and uptrend, 2-day momentum, which is my go-to signal, price greater than 5, 500,000 above the 200, and what do we see? Pretty much nothing new. So added a bunch of different industry groups, and we got the same basic ones. So as a top-down guy, I've looked at what's leading on the sector side. I've looked at what was leading on the industry group side, and I established a list of stocks. I looked at some, I ran some signals, and I think at this point it's Deere and CNH that I like the most there. Now let me show you something else that's kind of cool. And let's make this by alphabetical order. Cool in that I didn't expect this. Oh, it's not showing it. What is home builders on? Maybe I don't. Well, home building looks interesting here. Real estate, nope, nope, nope. I probably skipped it. Everything has different titles. I don't think home improvement had what I want. Let's see what's in home improvement. So I always got to remember. So one thing I'm going to ask Praveen to do is to have a clear all filters. That might do it. No, I think he can certainly create that, make it a little bit easier to clear all filters. Home improvement is not the home companies. Well, the reason why I wanted to show you that, and there's somewhere in here, well, let's just look for one. Construction. There we go. And we don't want home improvement, so let's kill that one. I just want to show you something that sort of surprised me today. This doesn't look like the home builders, does it? I don't know what that is. Let's see, does it have? Well, I'll just show you then some of them. Toll Brothers, TOL, and all these have been killed. Okay, and what do you have? For whatever reason, it takes a little longer, and you can see how they're starting to flatten out. How about DHI? I think it's DHI, or is it DHR? Maybe it's DHR. Nope. How about DHI? Yep. Starting to move up. How about Meritage? MTH, I think. Are these things putting in a bottom because they're all starting to move up? And is it time to start thinking about that? I was surprised to see them actually turning around, and they obviously, oh, well, that's not MH, maybe it's MHO. They've obviously had a pretty rough time in the market for a while. And what we're seeing is a lot of these a lot of these home builders appear to have put in some type of a bottom and are turning up. I know that because I've been looking at a lot of stocks tonight. That's kind of what I do for fun on Fridays, and I got this wonderful wife who puts up with it, and so it's basically I spend look at 1,000 charts every night. Now this was a top down, not that exciting. Let's look at a bottoms up. So I have a group here, I call it JAS, and it represents the NYSE plus the NASDAQ plus the Amex filtered for $1 and 100,000 shares average traded. And so I have a long list of stocks. And what I like to do is I like to go back to those filters. And my favorite trade, though, is that pullback and uptrend, 2 days momentum, um, price of 5, volume above the 200. And I'm going to make it a little bit easier. I'm going to go to Bongo up here. Bongo is my trending indicator, and that 3461 is going to reevaluate how many there are. They're running all those filters, and let's see how many I have. Now, I just got this version of the software tonight, so it is possible that one of these is not behaving. So I'm going to do it one at a time and see if I can figure that out. We released the software for commercial purposes on last week on Sunday, and we did some updates today. So I look at 2-day momentum. Well, that is definitely weird. That scanner was working earlier. Tell you what, let me pause it for a second. Yeah, I apologize for that. It's working now. So you can see I've got 11 stocks that meet those criteria. And I'm just going to look at them very quickly. AGCO we already looked at. It's kind of a sideways move. Big move breaking out above the 200 and the 50. Looking at it on the weekly charts. Um, it's in a bad downtrend, although this kind of looks like a bear flag. So I'm going to not be interested in AGCO. ASLE. Aerosale looks very interesting. Now, I didn't show you some of the new features. One feature that I have showed people because I'm very happy with it is earnings. Last earnings were the 6th. That was on Friday. It had a big change, 9 cents here, versus loss of 2 cents. So that's a pretty big positive change, a bit of not a surprise. And revenue was up. So it's a relatively cheap stock, market cap of 438 million, does not pay a dividend, PE 14.71. Doesn't look that exciting there on the fundamentals, but look what else I got. I got news. So you could actually read the call transcript and whatever stories you want. Um, so that was interesting. So we got the news feature just added in this release, and I've got some more stuff coming tonight before I do my video tomorrow. Very exciting. That kind of looks interesting. I like the momentum breakout volume and gap. I like the RS and the OBV. I like the fact everything except that it shows extended here, but I might consider that. CCK, I think these are like cell phone towers. Um, Really, I want to see the uptrends. Let's look at the weekly. And, hard to see much of an uptrend. I guess if you go back far enough, it's kind of sideways here, and that part doesn't excite me. But what I do like to see here is it is breaking out with the relative strength OBV. It's had some blue dots. Not my favorite. CNH we already know we liked. John Deere we liked. Toolworks kind of looks a lot like that CCK, although it's breaking out, and I do like this one. MSM, I think it's industrials as well. Nope. Here is Prestige Computer Brands. Beverages did well. I think they are a alcoholic. No, they're not. They're consumer staples, things that are in your bathroom cabinet. And they're breaking out nicely here, so I might go in here, um, check the fundamentals. Earnings came out in February, big change, decent surprise, revenue change up. Trades with a multiple of 10. Surprisingly for staples, doesn't pay a dividend. It's healthcare. Is it extended? It's not overly extended for me, so that might be one I would look at. PCAR, just let me go to a weekly chart. Big uptrend, sideways move. That's why it's important to look at the weekly chart. So, because here it just looks like the sideways move. And a fresh breakout of the 50, 2 days in a row, which is what all these have with the momentum dot. Relative strength and OBV look good, not extended. I like PCAR. Vive, I think it's like clinical trial software, but it's tech software for healthcare. Run up, sideways move, hasn't broken out yet, but it's got my 2-day momentums. Looks okay. And then WU, which is, um, what is WU? Come on. I think we just had the update come out and I'm going to have to restart it. Well, I think on that note, I'm going to stop. What I wanted to show you was how I look at the markets. You might think I spend way too much time looking at the markets, but I'm a top-down guy, and 50% of what happens tomorrow is going to be driven by the markets. 20 to 30, and I'm talking for Monday, by which industry group, which means only about 20 to 30% of what we get in the market is how good of a stock picker I am. I think I'm a good stock picker, but I got to see what the market's doing. And I guess I want to just show one other thing. Some people, nope, I think I'll wait to the seminar. So 40 minutes is plenty of time. 44 minutes is getting too long. Just to remind everybody, there will be a deep dive into how I do top-down trading using a lot of different programs, and then how I trade the stocks that I pick. That's not my program, that's TradeStation. And look in the link below. If you like this, hit the up arrow, or the thumb, subscribe, hit the alarm. If you really like it, the best thing you can do is sign up for a Top Down Trader Google group. And if you have time, come see us tomorrow morning. Have a great rest of the weekend.